SPX, the chart that rules them all. Strong rally. Breakdown is proved to be a falsie, and that in itself is actually quite bullish, right? False breakouts are always nice. Price reverses quickly the other way. So, yeah, bullish. But we have closed down this gap here. So we filled the gap, and we did kind of falter around it as well with these indecision bars, pointing to, you know, if that was a continuous session, you'd probably expect price to kind of retrace a little bit. But, you know, it makes me wonder. It makes me question whether there are enough ammunition in mega cap weighted stocks, because there isn't much else, right? What else is good? Trade war optimism is done. Shutdown ending, you know, that's done. We rallied on that. More trade deals. You know, we pretty much did the big one with China, so that's done. Even if more come in, I'm not sure what's incrementally more positive with any more new headlines and deals. The India one has been telegraphed for a long time as well. And then, you know, what's left? We have some AI capex concerns. You know, whatever you think of that at this stage right now. And then we have some fresh concerns about the real economy. So on the balance of things, I'm not sure there's ample amount of positivity to just drive this rally higher in a strong sort of manner. And being at this technical spot here, it just kind of makes me kind of think about those types of questions, or pose those sorts of questions. So something to keep in mind. And we also saw the headline. I think it's 9984. So SoftBank has a nice proxy for OpenAI, right? They've been selling their NVIDIA stocks to fund more OpenAI or AI capex build-outs and stuff like that. It's flopped over today. It's recovered off the 50 DMA, so we'll have to see how that goes. But I think, you know, as I raised, this could be a nice chart to kind of just keep tabs on as a proxy for OpenAI, and how that whole data center type of theme is trading. Yeah, it's flopped over a little bit today, so it's looking a tad weak, but this structure does look like some stability will follow when you see this type of structure. So looks okay-ish. I think this is going to be a chart that I'm going to be coming back to quite a bit. Yields. So we saw the 10-year, right? We got the gap lower today on that softer data. You know, the dollar should be under pressure. Dollar yen, for example, you know, but it's gone the other way. And that's probably to do with, you know, it has to be to do with risk on more than anything. It can't be, it's definitely not completely a function of rates. So yeah, there's that. But I am short dollar yen this morning to reflect this. And if we look at the DXY as well, this one, you know, we're looking at the DXY weighted rate differentials, does look quite soft in terms of relative levels. When we've been trading, when the spread has been trading around here, the dollar has been much lower. So if we continue to see heavy yields, I'd probably expect to retrace a lot further. I did think 99 was yesterday was a natural place to get to on the softness of data until the data starts to turn more positive. So dollar, I think you have to favor a bearish bias for the time being. Dollar CAD, while we're at this as well, is looking quite nice in terms of seeing more downside. If we trade through the lows, that's a momentum trade right there. Classic textbook. Just trade the break of these lows and chase that momentum down. So that's definitely one to keep an eye on today. What else? The Aussie, you know, looks good. Let's pick up another chart. Oh, I've got the Aussie index here. You know, we do have a strong move. There is a sort of breakout going on as well. You know, if you look at the weekly, it should show, or I don't like monthly charts, but it should show how strong this upward momentum is. And so, and then we had a nice little strong bounce last month as well. So looking pretty good, looking pretty strong. Odd, have to be constructive on that. With silver and copper, you know, looking up as well. There's also aluminium is also rallying. Some of these industrial metals are also rallying because there's some undersupply concerns and things like that. So, you know, all good stuff for the odd. Pound odd. is obviously a theme to be thinking about as well. Maybe you have to take the ones with the weakest and strongest macro themes. Pound odd, I think, is one to look at. If we look at this kind of channel, it's not precise, especially when you look at when you chart the crosses. They can, that you do see a lot of spikes, right? Just the nature of crosses. So you do have to do a lot of times. It's always a bit of best fit, and it's always taking any sort of breakout or breakdown signals. Always have to be taken with a pinch of salt with the crosses. So it's another good example that broken down here, but as we saw, we rebounded. But the fact that we're back down here is good. It's probably an even stronger breakdown signal. Yeah, pound odd. I do like this theme. Euro odd, probably not much reason to get short euro odd over pound odd. So pound odd, what else? What else would you long odd against? Odd yen, if you think the data is going to keep improving, sure. And also the yen starting to behave more like a risk proxy more than it does a rates proxy, particularly in the last couple of sessions. So odd yen might be a little bit difficult to chase, but for the nimble short-term trader, definitely should see more momentum as we break the highs. So looking pretty good. What else is there with the odd? Odd CAD as a side something? Nah, very uninteresting. Waste of time. Yeah, that's pretty much it. Let's see the chat. EU coming up against the 20 DMA again. I think I like this for a strong move to the upside. There's definitely a trend line here of some sorts. That's looking quite bullish. Yeah, I think this might be a trade in itself, just to express the bearish dollar theme that's going on right now. Yeah, it does look very bullish. So yeah, I think Euro USD is a good shout for long. Yeah, we have a sort of a medium long-term view about the dollar that it should stay up just because US fundamentals should be relatively strong compared to a lot of the major economies. Um, you know, north of 3% annualized growth. Eurozone is at like around 1%, maybe 1.5% at best. All these other economies too, very weak growth compared to US. So, yeah, but that's the medium term view. For now, the dollar, there's nothing really positive for the dollar right now, and it seems. So, hard to do some cross trades as euro. Yeah, yeah. I think for euro, it's the best thing to do is to be long euro against a dollar, right? It's basically trading that DXY chart. I think that covers everything, so we'll wrap it up there. Thanks a lot for tuning in, and we'll talk to you all in the chat. Cheers.